Hey everybody, Dave Mattis with Remax of Reading and the Dave Mattis team. I am at the steps of the Pennsylvania State Capitol building here in Harrisburg. I'm up here for some Realtor Association business meetings, and I'm coming to you today with a video. I wanted to give you some information on the recent federal tax changes that went into effect, and I chose a couple of them specifically to talk to you guys about that affect real estate. So let me get into that right away. Talking about capital gains on the sale of a primary residence. Currently, you were exempt individually from $250,000 capital gains on the sale of a primary residence that you've lived in for 2 of the last 5 years, and $500,000 as a married couple. And they talked about eliminating that entirely. So the Realtor Association, got up in arms about almost all of these things and actually fought for a couple of really good changes. So they ended up keeping that the same. So you're still exempt selling your primary residence if you've lived in it 2 of the last 5 years, up to $250,000 individual and $500,000 for a couple. So that's good news. So the next thing that they talked about eliminating was the mortgage interest deduction. So keeping in mind here, existing loans are grandfathered. Okay, so if you have a mortgage and you're moving ahead and you're able to itemize, then you are definitely still okay. So mortgages going forward. So again, they talked about eliminating it entirely, and before the exemption was on interest on mortgage loans up to $1 million, and they reduced that to $750,000. So in our market in Berks County, we're not really going to have a tremendous effect, with that, because loans, that are under, $750,000 and under, the interest on those loans are still going to be tax deductible. But again, keeping in mind that existing loans are grandfathered. So the other real key point that I wanted to make about this one, I learned through researching this that home equity loans and lines of credit on first and second homes are no longer tax deductible. There was always a question as to whether you used a home equity loan for home improvements, was it deductible, but pretty much everybody that had a home equity line that itemized was able to take that deduction, but that is no longer. Okay, so what you have to check with your tax advisor on is if you have an existing home equity loan, will you be able to continue to deduct it? So is that grandfathered? Please check that, but that's very good information. Here's the other one I wanted to talk about: state and local taxes, and that includes state and local income taxes and property taxes. Prior to this big tax change, there was no limit on the amount of those that you could deduct. And what they did was, again, talk about eliminating it entirely, again, which is typically what they do. But we got them to allow a $10,000 cap. So state state income taxes, local income taxes, and then state and local property taxes are deductible to the extent that that you are able to itemize up to $10,000. So that will actually have an effect on Pennsylvania homeowners, that have larger tax bills on their primary residence. They pay a certain amount of percentage for their state income taxes and their local income taxes. So here's a side note that if you are a rental property owner and you do a Schedule E on your tax return, that the taxes are still considered a business expense, so you will be able to deduct them on your rentals. Last thing I wanted to talk about is pass-through entities. So if you are an S-Corp, partnership, or sole proprietor, this, again, you need to consult your tax advisor but to see how this will affect you. But for most industries, this should be a positive effect. And don't ask me to explain exactly how this will work, but it should be a positive for you. However, there are some industries that are excluded. I learned that along the way as well. So getting back to whether you can itemize or not, all of these things that we talk about are for people that can itemize, and they've increased the standard deduction for an individual to $12,000, and then for a joint and family up to $24,000. So basically, you have to have deductions that go over that for you to be able to itemize. And here's where we get a little upset and got a little upset about this tax change, is that Congress estimates that only 5 to 8% of people in our country are going to be able to itemize. So that's kind of where we got a little bit up in arms, saying that now people are, a certain percentage of people that don't itemize are going to lose the mortgage interest deduction and so on and so forth. So anyway, I just wanted to let you know that. Second to last thing I wanted to talk to you about was that what I'd like you to anticipate would be a couple of correction bills, and that would, you know, be when you have something that gets passed of this kind of a large and sweeping nature. I mean, this is really the biggest significant change in 30 years in our tax code, is that they're going to discover that there were some unintended consequences, and I'm sure there are going to be quite a few correction bills to like rein some of these things back in. And then last but not least, if you're interested in the state of Pennsylvania and where we are with school property taxes, they're actually firing up the conversation again here in Pennsylvania, and it is, you know, likely that there will be some really, really strong discussions and conversations about you know, possibly eliminating school tax here in Pennsylvania. So whether it'll happen is anybody's guess, but we'll keep you posted. And then last but not least, I wanted to mention, make sure that you consult your tax advisor on any of these things that I just talked about. Hopefully this was helpful. Thanks.